Hello there, folks, and welcome back once again to another episode of Southbank Live, episode 47 of the show where we discuss what's going on in markets and politics and around the world and try to understand a little bit more about what's going on. Welcome and good evening to everybody who has tuned in for this evening's episode, or if you're in another part of the world, good morning or good afternoon. I'm joined once again by John Butler. John, how are you getting on this evening?
Oh, very well. It's been a nice couple days here in the UK.
Yeah, indeed. We should savor them while we can get them, I think. Plenty of different topics for us to explore this evening, John. We never have enough time to discuss all the things we want to discuss anyway. But just to start us off, maybe on a slightly more light-hearted note, how about we start with our long short? What are you long this week?
Well, I think that you need to, again, just look around the state of the world. And I still believe that the performance of the precious metals here is just so unbelievably poor relative to what they could and should be doing in this sort of context. So I'm carrying that forward, as it were, as my long here. I think it's just such a no-brainer to be long gold and silver at this point in time, given what's going on in the world. And I could go on and on about the reasons why. I'll just sort of leave it as that. That is, they're not trading as well as they should be. You might say, well, gee, that means we're getting something wrong. I'll just say, no, it doesn't, because to be fair, it's much more of a medium to longer term thing, to be honest. And if you look at the great gold bull markets of history, they tend to play out over longer periods of time, and you just have to wait it out. So that's my long.
Certainly, and everyone expects things to move in a straight line, and it's not quite the same way. There are, of course, so many comparisons that we have predicted that would take place between now and the 1970s that are now taking place. And the 1970s, while a great time for gold, gold certainly didn't move in a straight line there either. There were plenty of times, even years in the 70s, when gold did not perform very well, and yes, it ended up being one of the best trades of the decade. Just hello to everybody in the chat. Do feel free to share your long and your short for this episode. It is always interesting to see what our viewers are being bullish and bearish on. For anybody who is new, this is just a segment of the show where we take a look at what's been going on recently, either in the markets or elsewhere, and give something that we're bullish on, our long, and something that we are bearish on, our short. Now, John, on the short side, what are you looking at? Because pretty target-rich environment, I would say, these days.
Well, yes, I think that there are a number of things which arguably are overvalued here, and notwithstanding what we've seen in the stock market, in particular in the U.S., which has been the relative underperformer, I think that there is a lot of just generally overvalued assets out there. But this is an interesting one because the U.S. stock market has been an underperformer, right? I mean, the FTSE year to date is basically unchanged, right? So the UK stock market year to date is basically unchanged, whereas in the U.S., you're off a double-digit amount percentage-wise. But that really is explained by the dollar itself, because the dollar has been a strong currency. And when you're comparing stock markets, you have to do that in currency-adjusted terms. And so when you adjust for sterling's weakness versus the dollar year to date, that explains roughly half up to 2/3 of the relative performance differential. And that, to me, is kind of the missing piece there. That is, the dollar itself is simply too strong. So going back to what I said a moment ago about my long and gold and silver looking undervalued, of course, I'm referring to them in dollar terms.
Yep.
And I believe that really is the trade here, the precious metals versus the dollar itself, because the U.S. stock market already has adjusted a bit lower in relative terms. Now, I still think that underperformance has farther to go. So if you want to sort of take a variation on that trade and say, hey, I've already got my gold, I've already got my silver, I would be overweight the FTSE as a stock market long versus the U.S. market still, notwithstanding the relative outperformance of the dollar year to date, making the U.S. stock market look weaker. I think the stock market is going to continue to weaken versus the FTSE, even in currency adjusted terms. So that's another way to kind of look at something similar.
Right. So the US stock market is going to continue to weaken versus the FTSE there. Right.
Even in currency adjusted terms. That's what I'm getting at. Even when you take relative dollar strength of late into account, I think the US stock market will continue to underperform and the dollar is going to be going down. That's how I see it playing out from here.
Yeah. very compelling case, I would say, certainly for the FTSE when you're looking at so many of the commodity producers there and how they perform during periods of inflation. But
Yes.
hopefully the government doesn't go too wild on the windfall taxes side.
No,
And
that
take
is
that from us too.
that is a danger, of course, that is. But I don't think that's going to get too much momentum because it's just there's going to be too much pushback if they keep doing that because it can be so economically damaging longer term. And I hope cooler heads prevail on that one.
Yeah, certainly. I think quite a few folks in the UK do hope that people remember the lessons of the 70s rather than being driven to repeat them in the chancellorship. I think for this week, I'm generally the member of the team who has a slightly more lighthearted long and short. So
you usually are.
this week I am very long U.S. Navy recruitment, and
Ooh.
it's a pairs trade. So I'm going to be short U.S. Air Force recruitment. Anybody who's been to the cinema recently may already have figured out why, but I watched Top Gun Maverick last night at the cinema. 2 years overdue. That thing was meant to come out in 2020,
Sure.
but a real masterpiece of American military propaganda. Of course, the original, I think, caused U.S. Navy recruitment to go up by 500% following its release, and they set up the recruitment centers outside the cinemas. And the manner in which they glorified the Navy rather than the Army helped with all of the Vietnam pain that was still existing in the States. You know, I heard a while back, John, I don't know if it's true, maybe somebody who is watching can correct me, but there's yet to be a Hollywood movie, a Hollywood anti-war movie that has not led to a spike in recruitment afterwards. Or to put it in a better way, there is yet to be an anti-war movie that is successful in its objectives. So it's like, with Platoon and Full Metal Jacket, all the time the screenwriter and the director is trying to tell the viewer, look at these young souls being wasted on the battlefield. Look at the civilian casualties. There's some young kid with his guts hanging out crying for his mom. It's all so terrible. Why are we doing this? But instead, the US public, the young men in the States see, wait, you're telling me I get to carry a gun and travel to exotic locations and develop deep emotional bonds with my brothers in arms? Sign me up. And those are the anti-war movies. And Top Gun is not an anti-war movie by any stretch. Even at the end of that, I felt like a true American patriot. Just wanted to get into an F-18 and blow the hell out of some Iranian uranium enrichment facility, which is never actually stated as being Iran. Of course, it's just a rogue state, and they just happen to still have some F-14s hanging around. But it was a fantastic film. So I think U.S. Navy recruitment is going to be in for a hell of a ride over the next few months, while everyone else is not. Everyone's going to want to be a U.S. Navy pilot, so they're not going to want to join the U.S. Air Force. They'll all want to be on the carriers, I think.
Well, you may well be right. And by the way, the U.S. Navy consider their skills in terms of flying so much greater than those of the Air Force. They don't even call their pilots pilots. They are aviators.
Right, quite right, quite right.
Taking off and landing on a carrier is a considerably more difficult skill than typical takeoff and landing operations on a proper fixed flat runway.
Yeah.
So, and then there's other aspects of it also, right? Which come into play there. But yes, no. The Navy brags about how inter-service rivalry. Of course, you're going to get it everywhere.
Certainly.
But they look. It's obviously the film, which is a very successful movie already. I mean, it's really done very well. And let's be fair. I mean, it looks like it's a well written, well put together, well filmed movie. So yeah, why shouldn't it do well? You're right. It might well have that sort of impact. But it's funny what you say about the anti-war films, and this is true also of anti-war literature,
right?
Which goes back, of course, forever. In fact, depending on how you choose to interpret it, you can argue that the Iliad is an anti-war story.
Right.
So that's pretty old. So this anti-war theme in literature and art and modern film has been around forever. But you're absolutely right. There's something in human psychology, and look, this is particularly true of young men, which is hey, you know what? I like using cool equipment. I feel kind of invulnerable. It won't happen to me, something bad. And sure, I want to, get out there and see action and, be a hero. There's just something in human psychology there. How else do you explain it? It's very,
Yeah.
it's very persistent.
Certainly. I'd never thought about that before with the Iliad, John. That's a very interesting, an interesting aspect to it. Because of course everyone just thinks of the movies when you're thinking of the anti-war. That's where when people are thinking of anti-war, they're generally thinking of much more modern day stuff. But of course, this has persisted for a very long time. I'd be interested if anybody who was watching had watched the new Top Gun. Maybe you didn't like it, maybe you did. I think the only negative side to it that I can think of, there is one part where a certain pilot is flying at over Mach 10 while turning the aircraft. And I think that would obliterate you, no matter how strong the aircraft was in real life. But folks, I'm very interested to see some of the longs and the shorts. Martin is long diesel and jerry cans and is short clotted cream. Martin, I can certainly understand the diesel and the jerry cans, but I'll buy as much clotted cream as you'll sell me. I'm not sure why you'd be short that. Maybe you can expand on that for us. Paul is long gold and short my patience. Very good, Paul. I'm short my patience too.
Well done.
And Stephen, long on fertilizer, short on rations. That's an interesting one, Stephen. Why the short on rations? I see we have some MASH fans. Very good series that was. I mean, that's definitely an anti-war one, but there's so much good sort of good angles to that, and it's so funny. I can imagine quite a few people be signing up for action after that. While Lorraine is long Putin and short Klaus Schwab, which is an interesting one, which kind of ties us into one of the things I'd like to start with this show. When we're getting into sort of the major topics, there is a headline I'd like to show, and this one is just from the BBC, I believe. So yeah, war in Ukraine. Britain is now sending some even heavier equipment to the Ukrainian front line. This is the MLRS, multiple launch rocket systems. And this marks quite a big escalation. I don't think many people quite appreciate what we're doing here when we're sending equipment this big over to Ukraine. And I wonder what we're really getting into the further we get into this, where we are becoming ever larger players in this conflict, and what it means for the UK economy, and what kind of backlash we may get from Russia as a result of this, and internationally amongst Russia's allies. I was hoping we could explore a bit of that, John. Maybe you can elucidate on that for us.
Well, yes. I mean, the UK has taken a leading position here within the general NATO effort to support Ukraine in various ways, and that includes, for example, a reconnaissance aircraft. The UK has a large amount of reconnaissance aircraft, and also general airlift cargo capability, which has been supplementing NATO in large numbers, in really quite large numbers. I mean, if you choose to watch, you can see daily many sorties of UK reconnaissance and cargo planes, which are flying into southeastern Poland, Romania, and are involved in clearly assisting Ukraine in various ways. And this includes weapons transport. Now, some weapons can be transported by air. They tend to be lighter, of course. The heavier stuff tends to go by some combination of sea, rail, and whatnot. But anyway, so the UK's involvement is not just Boris's rhetoric. I mean, it really is happening, and you can really see it happening. And these long range, or relatively long range, I should say, missile systems, they're called standoff weapons because they have a range which is longer than the normal range of field operations. So when you have typical ground operations taking place using artillery and tanks, including heavy artillery, which has quite a long range actually, standoff weapons have even longer ranges. That is, they're just not going to get hit. I mean, they could buy an airstrike or buy another standoff weapon, but they're not going to get hit by the normal ground operational stuff. So they're able to kind of sit out of the fray and still rain down whatever projectile or missile they've got to deliver on the battlefield. And the problem with this is that if you look at a map, the battlefield is, of course, the rim of Ukraine around the border with Russia, obviously, right? Because that's where things have started, and that's where most of the big battles to date have taken place. And so if you're going to give Ukraine standoff missiles, it will give them the ability to strike Russia directly. And the problem is, if you're the United Kingdom, a member of NATO, you're the United Kingdom, you give them that specific system for that specific purpose. How does Russia interpret that? They see that as the UK effectively getting involved militarily. Not just, oh, here's some food, here's some supplies, here's some supplemental ammunition, but here's an actual system that allows you to strike Russia directly in a way you weren't able to do before. That is an escalation. It can only be interpreted as such. Now, again, look, you can say that, hey, hold on, Ukraine needs to be backed by NATO. NATO are the good guys here, and we've got to stop Russia somehow. Leave that aside. It simply is an escalation, objectively, right? Yeah. It just is, and so it needs to be understood as such, and the UK needs to consider the implications of that as such. But there you have it. It looks like this is going to go ahead, and it is controversial for the reason, because it is seen as an escalatory action.
Yeah. How do you think there could be a retaliation specifically against the UK from Russia in that regard? So we're already seeing militarization of grain and fertilizer on the Russian side because they know the real value of these assets, while we in the West have just taken them for granted and just assume that they'll always be there. What kind of manner do you think Russia could strike back at the UK economically, even if not militarily?
Well, I mean, you've already mentioned it, right? I mean, there are things that are already happening, and they can just continue to tighten the same screws, as it were. And so that's that. Yeah, but as you say, striking back economically is something that Russia is clearly capable of. And I mean, why fight on the battlefield that your opponent wants to fight on? Choose another battlefield where you think you have an asymmetric advantage. I mean, that's proper strategy. And so, you can understand why Russia is fighting on the economic front. And of course, politically, that might look bad. It's like, oh, dear, you're constraining world food supplies. This is a war on the poor. How can you do that? Well, it's war. Hello. I mean, what did you expect? So, however, when it comes to military options, how I've said time and again that I don't believe that NATO or Ukraine itself, for that matter, has good military options for what is clearly a fairly conventional ground war in eastern Ukraine. Okay. They just don't really. Russia clearly has the upper hand. And while it has been challenging at times, they've clearly been somewhat successful in gaining a lot of territory in eastern Ukraine. Okay. But the thing is that if you ask the same question about Russia, does Russia have good military options vis-a-vis the UK? No, they don't. No. They really don't. The only military option that I think they do have is they may, and this is a huge may on my part, they may have enough ability now in theater with certain weapon systems to intercept any of these standoff weapons before they become operational. That is, if you have good enough intelligence, good enough observation, good enough, what you need to figure out how these systems are going to be moved into position and where they're going to be deployed, you can take them out before they become operational. And I suspect Russia will try to do that, but I honestly don't know if they have the capability to do that or not. So in a way, that's a direct military response, but it's in theater. It's not as if they're going to come after the UK homeland. They really don't have any options in that regard.
Yeah, I do feel incredibly frustrated at some of the commentary on the war and its effects now when we're looking at the militarization of grain, as though this is all unexpected for Russia to do X because it was so beyond the pale, when this is a wartime environment, and in wartime you militarizing food is not exactly something that's new, and this is something you would expect when that's one of the strongest hands that they have. It does seem quite a long way away, John, now that this is going to stop and this is going to go away. Is that your thoughts as well, or is there a way out that I'm not really seeing here?
I think there is a way out. I think there is a way out, and it's a way out which I admit is a minority view, and that's fine. I have no problem being in the minority here. I think that, and I think I may have mentioned this before, that although it was a long battle, long difficult battle, the fact that Russia has succeeded in Mariupol is a big deal, because that's the biggest port on the Sea of Azov. So it's the biggest port in southeastern Ukraine. I think that improves their logistical supply situation so fundamentally that it basically means that they now simply militarily you can't fight back now using any conventional military response in southeastern Ukraine. They've got it. They basically got it. And so they've achieved what is one of their most important objectives, and there's no way Ukraine's going to get it back. I think it's just done. There are other parts of the country where Ukraine can still put up a fight, and obviously, if NATO is going to help out, Ukraine is going to have that support to put up that fight. But I think that really, in a realistic assessment of the military situation, Russia's actually achieved quite a lot now, and you're not going to be able to boot them out. And so I think some acceptance of that is possible now. I think it's possible that NATO is going to have sort of a heart-to-heart conversation with itself and with Ukraine, and say, hey, let's go ahead and just accept that we have caused tremendous difficulty for Russia. We can keep Ukraine mostly intact as a country, but we're just going to have to accept some territorial concession. And I'm not the only one thinking this way. Of course, yes, it's a minority view, but among others, elder statesman Henry Kissinger has basically said his version of the same thing. It's like, enough now, guys. Russia's made it clear that they're not going to let Ukraine join NATO, and they fully expect that the part of Ukraine, which is largely ethnically Russian, simply is going to have to be independent, and Ukraine's going to have to recognize that sovereignty of them being a separate state, possibly being absorbed into Russia, but that might be a topic for another day. In any event, so I do think there's a deal to be done here that could happen quickly, but it would require NATO to have a very frank discussion with the Ukrainian government and say, look, you're going to have to do this deal now. We will, make sure Russia doesn't go one, or we'll help you stop Russia from going one step farther. We'll help enforce the ceasefire. We'll help hold Russia at bay from any further demands, whatever it is, and help defend you in future, just within reason. But you got to do this deal now. It could happen that way, and if that were to, and it could happen quickly that way, because the longer term prospect is this attrition warfare where Russia just keeps absorbing more and more and more of eastern Ukraine. The ports on the Black Sea all remain closed. No grain can get out, and you miss not just one but multiple growing seasons, which almost by definition is going to result in some sort of global famine. Just how bad it is, I don't know. But you're talking about too much disruption of major global grain supplies and everything else. I mean, we're only talking about grain here. There's so much other stuff that's being disrupted by this, and all of it's bad, right? Yeah. All of it's bad. So, I mean, nobody wants to go through that, but I suspect Russia is absolutely prepared to do that. I honestly think they are, and I'm not sure the rest of the world is. So, but do you really want to wait it out 2 more years?
Big time. My only fear is I don't think the rest of the world is even aware of the consequences that are going to come the longer this happens. So I really hope you're right there, John, and we do manage to get some peace and something gets sorted out, and there's less killing, and there's we managed to find some kind of ceasefire there. Of course, grain prices, as Seamus comments, last grain price hike caused the Arab Spring in the Middle East. Certainly one of the drivers of that whenever food prices get out of control. I mean, hey, Russian Revolution was, a lot of that was about the price of bread in the first place, wasn't it? So yeah, plenty of things to take into account there. Funnily enough, with those multiple launch rocket systems, I was massively into tanks and armored personnel characters and carriers and stuff when I was between about 8 and 12. And there was this game called Ace Trumps you got, which was a rip-off of Top Trumps, because they didn't do a tanks one for Top Trumps. So you had to get the Ace Trumps one. And there were these multiple launch rocket systems in it. And it was all Cold War stuff. And Russia's, of course, is very big on still showing off loads of their Cold War equipment. And people, just a few years ago would say, "Oh, look how outdated all this stuff is. Look, they're just living in a different century. It's the world is completely different now. Yet here we are, just shipping this stuff over there, and then using it in a conflict." Now, we have covered a lot of Ukraine here. I think we should pivot slightly onto some of the consequences for the UK at the minute. So we're talking about the UK. If we harken back to the 1970s, there are so many correlations we could draw here, and indeed the fact that we're in a very much Cold War environment here, and we're seeing grain price inflation and things like that. We've got economic malaise in the UK. Growth is not looking too good. We've got a central bank that isn't really hiking rates nearly fast enough in order to kill the inflation. Indeed, I said recently that there's nothing they can do. So plenty of parallels to the 1970s here. And now we have political dysfunction very obviously entering the mix with the no confidence vote in Bojo. What's your take on this setting at the minute, John? What should we expect next as we're seeing so many reruns of the 70s?
Well, indeed, you're absolutely right. I mean, the political instability now that Boris's government has been clearly weakened by a quite large number of people voting against him in the recent vote. I mean, keep in mind in the 70s, I mean, you had a serious breakdown in UK politics where it was extremely difficult to form a stable government. And so, the government just changed hands left, right, and center, and nobody was ever really able to implement any meaningful program to do anything. And that stalemate, of course, eventually results in a Thatcher arising out of it who finally becomes somewhat of a stronger character with a more stable government. But it took a lot of going back and forth to get there.
Yeah.
So it's looking increasingly like that. So you already have the inflation arriving. It's been with us now for all year pretty much. And of course, it starts with energy, it starts with food. But look, it's spilling into everything, right? It's really spilling into everything. But, and this is where it gets interesting, it's not now still spilling into house prices. The housing market is starting to slow down. And I felt at some point what was inflation was going to turn to stagflation. And sure enough, if the housing market slows down in this country, notwithstanding the general inflation we're seeing in consumer goods, that's very stagflationary because a lot of domestic demand depends on strength in the housing market and the ability of banks to lend for future consumption plans of whatever kind. A lot of lending takes place against the value of housing. And so if house prices are no longer rising at a rapid clip, which they naturally were doing coming out of COVID, right? Of course, that was going to happen coming out of COVID and whatnot. But if they're no longer rising at a rapid clip, then we might remain in a general inflationary environment for consumer products for some time, but we're not really going to be getting any more growth in real terms. So it becomes proper stagflation as opposed to just the inflation, which we were already seeing.
Yeah.
So it's looking more 70s like, all the time, both on the political front and on the economic front. So we're in for a rough time. I mean, at some point, we're going to start to see unemployment numbers rising. Maybe not dramatically, but keep in mind, we're starting from a low base, right? Unemployment in the UK is relatively low. But at some point, that's going to start to go up. Maybe before the end of the year. I think it probably will. And so and that, of course, was also a significant part of what was going on in the 1970s. So you add it all up. We have the inflation. We have now signs the housing market and domestic demand generally are beginning to weaken. You have increasingly widespread labor strikes, naturally in monopoly industries, but that's where they tend to be concentrated anyway. So that's no surprise there. And you have the political instability thrown in now as a result of what's happened with the confidence vote. So you've pretty much got the whole recipe. But this is a point that I can't stress enough. It could be worse than that. The fact is, the total economic debt burden, public and private, is greater than that of the 1970s. Demographics are not as favorable. That is, the size of the workforce relative to dependents, old and young and disabled, is much, much lower. Okay. So you have some fundamental economic disadvantages today vis-a-vis the 70s that make the stag part of the stagflation, sadly, even more probable as kind of a long-term, low productivity, low growth structural problem that is extremely difficult to get out of with policy. I mean, it's hard to quickly change stuff like that with policy. It can take years. And so we might really be looking at a multi-year period of very poor economic performance in the UK.
Yeah, everyone thinks of the 70s as this low point, which couldn't be worse in the future, right? But we have all of these factors and structural issues that mean that when we do this rerun of the 1970s, it could be even worse than the 1970s were in a lot of ways, which is maybe not what everybody is expecting.
Well,
Stephen suggests that strikes, large-scale strikes, might be something that we're going to see to really add to the 1970s ambience. Is this something you're thinking we might see a lot of, John, when it comes to the public sector?
Yeah. Yes, I think so. Yeah, I think it's only natural. It's the way it's a natural dynamic, in my opinion. Right? It is to be expected. I'd be surprised if it didn't happen that way.
Yeah, it does feel somewhat inevitable, especially when living standards are being squeezed so much as they are. And there was even, I think it was just in the FT today, there was an article saying that because labor and the unionization of labor isn't what it was, there will be even more of a reticence to do anything about living standards, other than simply letting the labor share of the economy eat it, while the rest of the economy just finds ways around it, which doesn't seem like a very healthy approach to how things are going to go moving forward from there. Are there any angles where we could see this really cause an awful lot of disruption for financial markets and not just cause a general malaise across the economy and across society?
Well, I think financial markets have to be sensitive to stuff like this, right? I mean, it's both symptom and cause. That is, it can be a symptom of what has become, due to past developments, a very poor economic environment. But then it can be a cause of further disruption. It can be a cause of further negative productivity shocks on the economy. And you can get into sort of a vicious spiral. And indeed, you could argue that some parts of the world, I mean, in Latin America is a classic example of this, is where you get into this vicious circle where the economy does kind of poorly for whatever reason. It might not be endogenous. It could be some external cause, but the economy isn't doing well. And some politician decides to try and do something which might work in the short term, but builds up longer term problems. And then things get really bad. And then, labor gets itself organized and really starts to mess with not just strikes and whatnot, but they get properly political about things, and then you get a push to outright socialism, right? You get politicians who are outright socialist and communist, and then you have the risk of outright revolution, and then you have possibly a socialist revolution, and then that doesn't really result in a great outcome either, and then the military gets involved. I mean, I'm not saying that's going to happen here. But you can get into these vicious circles that aren't nice, where bad economics sadly becomes bad politics, becomes bad economics again, and it can be hard to break out of that. Now, again, I'd like to think that there's enough historical and common sense here in the UK to work through things like that and eventually turn things around. But it's not going to happen overnight, no matter who's involved.
No, it doesn't feel like there's... Everyone just wants the world to get back to the 2010s. Everyone was moaning about the 2010s as being this terrible time. And now we're here and everyone's like, actually, 2010s weren't that bad. And maybe we'll be thinking that the early 2020s were really good in a few years' time. Who knows? Hopefully it doesn't get too bad. Hopefully we do find a way of muddling through it without too much disruption.
Which again, the UK has a fantastic history of doing.
Right.
The UK has the occasional really bad decade, not just the 70s. There are many other examples. And yes, sometimes there are strikes. Sometimes there is a degree of social unrest. But the UK has this pretty good historical track record of always getting its act together in the end. So, I mean, let's at least be somewhat optimistic here.
Yeah. Yeah, there are plenty of other countries where you'd rather not be when there is big, serious input inflation everywhere. Like, for example, certain places in the Middle East. Funnily enough, Seamus believes that the new Top Gun movie was in North Korea with the mountains. So maybe I'm wrong there, but I'm pretty sure it was an Iran play. But I could be wrong. We do have some interesting comments here. Plenty of them regarding how Russia might act next, with speculation on things like cutting subsea power cables when you're looking at asymmetric warfare. I know a lot of people put a lot of stock in Russia's submarines having big scissors on the front of them, being able to snip the internet. Interestingly, we do have a comment from let me see. I think it was just from somebody who was in Cornwall, and we're seeing that there were new cables being laid for UK-US security, which I think is interesting. I wonder how long those cables might be. Jamie comments: have people thought about why gold has not reacted as it did in the 1970s? One thing is different: algorithms, technical trading, rather than fundamentals. Interesting comment there, Jamie. What's your take on that, John? When it comes to the rise of non-human market participation, where algorithms and other programs are trading the market using past information to try and skim a little out of it, do you think that might have something to do with the reason why precious metals in general have been so subdued, simply because there is so much trading which is non-human and is thinking less about themes of 1970s repeat and more about this pattern looks the same as this other pattern that took place 5 minutes ago. I'm going to act in the same way.
Well, there's certainly something to that on shorter time horizons, and this is but the time horizons, the shorter time horizons can become longer when you introduce a liquid futures market. So look, commodities, right, are strictly limited in supply. The whole nature of commodity markets is that they're not unlimited, and so if there's a shortage, the price kind of has to go up. I mean, it's not something like a corporate stock where people have these long-term expectations of just how profitable a company might or might not be, and so you can bid up or down the share price accordingly to levels which are way, way above anything to do with current profitability, or way, way below anything to do with current profitability. That's not true of physical commodities. The fact is, the price in the market has to be one that's pretty much balancing supply and demand in real time and space. But when you introduce a liquid futures market, which goes years into the future, then you can have a lot of trading which is just paper based and more speculative in nature, and can lead to a bit of a tail wagging dog situation where the futures market takes on a life of its own, and where most of the positions are simply rolled over indefinitely, and there's very little actual physical settlement that takes place. And so the physical constraint on the market doesn't serve the same function, and there's not the same sort of real-time price discovery that goes on. Now, some people actually claim that allows for potential outright market manipulation and fraud, and it's kind of difficult to disprove that because it's hard to prove a negative and whatnot. Who knows? But the fact is, I do think the structure of markets has evolved, and I do think that not just the precious metals, but I think commodity markets generally sometimes so-called overshoot, if you want to call it that, in large part because there's this weight of the futures contracts, which is pulled left and right by speculators who may have no idea, literally no idea, what's truly going on physically on the ground. But still, longer term, that can't continue. Longer term, physical supply and physical demand ultimately have to meet, and markets ultimately have to clear. But long term can be a long time, and certainly if you believe that there could be a degree of market manipulation going on, then who knows how long that might be able to continue before somehow, some way, it's forced to come to terms with reality.
That system can work the other way around, though, as well, can't it, John? So when you have the futures market, which is totally out of touch with reality when gold and silver prices are low. At the end of a bull market, after prices have been high for a sustained period of time, you can similarly get these market participants who are out of touch with what is going on the ground, even if the value of paper money is rising and the value of gold and silver should be falling, right?
Oh, yeah, fine. It could work. It could work either way. Yeah.
Yeah. It is I think people, well, gold investors in general are generally people who have a deep appreciation for history and have a lot more patience, I have found, than investors in other sectors. So I don't think anybody is too upset at the fact that gold prices are not enormously higher than they are already. And if we are making this comparison to the 1970s, there were years where things, it wasn't all fine and dandy for everybody in the gold space.
Oh, look, I scratch my head a lot regarding what gold is doing here. And then every time I just think, wait a minute, why isn't it higher? I force myself to go back to the 1970s, and you can find multi-month, multi-quarter, multi-year, probably not, but you can find pretty long periods of time when inflation is steadily rising and gold's going down. I mean, they're in the sample, right? They are in the sample. There is not some one-for-one relationship here. And yet you step back, you step back from these charts, and it's obvious, right? That gold is outperforming, but there's no good correlation between the inflation spikes of the 70s and the gold price spikes. The gold price spikes sometimes precede the inflation spikes. They sometimes follow the inflation spikes. Whatever, it's all over the place. And sometimes this goes on for, as I say, quarters at a time. Years, not really. I don't think there's a multi-year period in the 70s when inflation trends higher and gold trends lower. Not multi-year, but there are some that are relatively prolonged. And what we're in today may be something along similar lines.
Well, I mean, there are years where gold closes the year lower than it began. It's not always, as some people would expect, just one straight line all the way through the 70s. There are times where you could be waiting it. You could buy gold at the beginning of the year, and at the end of the year, despite the 1970s having just seen the gold standard be totally executed, there still isn't this massive boom. And I think, given where we are currently, I'm not actually all that surprised. I think people take a while before they start really deeply changing their minds on the trends that have persisted for the last 2 decades. So we're only 2 years into this decade and this new regime with first Wu flu and now the Ukraine war and inflation no longer being transitory. Actually, Janet Yellen says, I was wrong about inflation being transitory, et cetera, et cetera. It takes a while before people change their minds. And I think I think they're destined to, when they see the value of money just being destroyed as much as we are. There is another angle to this, which Seamus asks, which I think is a good one. Seamus, are we heading for recession? Doesn't that usually mean lower commodity prices? So avoid emerging markets and go defensive like food producers. This is an interesting angle on the inflation side. So when inflation starts actually killing economic activity, demand for commodities should go down, and yet commodities are often what people use in order to protect themselves from inflation. There's this interesting system that takes place there. What's your take on it, Joe?
Well, this is why stagflation is an interesting concept, right? Because what you're saying is that the inflation is structural and persistent, even as the economy goes through cycles, as it normally does. And so, yes, if you're in a structurally stagflationary environment, and I believe we have entered a structurally stagflationary environment, which, as already discussed in this episode, right, bears tremendous similarities to the 1970s. It means that when the cycle is swinging up, when economic activity is improving, the price level is going to be rising. And then when the economy rolls over, fine, the rate of inflation may come down a bit, but it won't come down as much as it would do were you not in a structurally stagflationary environment. So, here we are, right around, the beginnings of double-digit inflation, here in the UK. And the economy is growing, although not by very much, if you ask me. And let's say it rolls over into outright recession here. Yeah, inflation might well come down to 5%. It might well do. But that's still a high in a historical comparison.
Yeah,
and then you come back out of the recession, and inflation may have settled at 5%. Maybe it gets down to 4%, maybe it gets down to 3%. But then the economy recovers and it goes right back up to pushing double digits again. That's what stagflation looks like. You still get your business cycles, but other factors equal, the growth inflation mix is much less healthy.
Yeah, it's not really what anyone wants.
No.
There are very few winners apart from people who produce real things and pull them out of the ground and can do so reliably.
And this is the thing. This is the thing that I keep saying. I'm banging this drum so hard I'm going to break it. The fact is that we're in this environment now, which is just so macroeconomically fundamentally different than that which comprises the bulk of the lifetimes of most investors alive today. The fact is, we've been in this market where multiple expansion by firms, stock market, firms, multiple expansion, valuation increases have been driven overwhelmingly by intangible assets. Tech, but there's other stuff too, right? But lump it all in and call it tech if you want to. It makes it easier to make the point. We're now in an environment where historically, and this includes the 70s, of course, tangible industries outperform. It doesn't matter if they're cyclical, it doesn't matter if they're non-cyclical, but tangible industries tend to outperform. These industries are boring, they're not sexy, they're not interesting. In many cases, unless it's a particularly large firm, you've never heard of it, but they do absolutely essential things at the bottom, lowest point of the economic value add chain. Mining, minerals, forestry, agriculture, fishing, waste management, recycling, basic, dirty, but tangible stuff. And this is where you want to be now. Really, if the 70s provide any guide, this is where you want to be. It also, throw energy into the mix, throw transport and logistics into the mix. They're still absolutely essential. Okay. These are things where there's always going to be demand. Doesn't matter how much inflation there is. Doesn't matter how weak the economy is. There's always going to be demand. Whereas a lot of this intangible stuff is super discretionary. And when people have to get discretionary in their spending across the whole range of goods and services that they consume, that's where the hit's going to be. And that's in these intangible assets.
Yeah, it's quite a flip from everything that we've been used to for the last couple of decades, and people want the great stock market riser, the big bullish stock, to be this exciting thing that promises to change the world, rather than this boring thing that you fill your car with. But I guess it's just a new paradigm, and I think people will probably get used to it. 50-year-old novice gym man says, do either John or Boaz have any suggestions of stocks to look at? Well, we cannot give financial advice on this show, 50-year-old novice, but we can describe general sectors that we are interested in. So this show is for infomercial and entertainment purposes only. But just in terms of general sectors, so we're talking a bit about things like food producers there from Seamus. In terms of general sectors that you think are the best primed for surviving this kind of environment and having nice fat cash flows in this 1970s repeat or whatever it is, what would you be thinking top of the list, John?
Well, again, I just rattled off a range of basic industries, and relatively non-discretionary types of sectors that I think qualify for that.
But like any commodity specific that you would think is better than other commodities, for example?
Well, look, if I look at valuations, and I look at a range of different valuation ratios when I'm assessing companies and sectors generally, and I look at the 3 M's, if you want to call them that: metals, mining, and materials. And everything to do with metals, mining, and materials is cheap in a historical comparison. Indeed, if you look at price earnings ratios, if you look at enterprise value to EBITDA ratios and whatnot for these firms, for these sectors, they're already at 1970s levels. It's almost as if the bad news is already priced in. Whereas that's absolutely not the case with the other stuff I mentioned, the discretionary, the intangibles. Again, call it tech if you want to. There's much more to it than that. But literally, the overvaluation of this market is, assuming the market as a whole is overvalued, which I think it is completely completely is a strong word, but it's overwhelmingly concentrated in those intangible discretionary sectors, and it almost doesn't show up at all when you get into these basic industries. Again, you can rattle up metals, minings, materials. There are others, agriculture. I mean, you could do worse than get a portfolio together, which is effectively, the conglomerates that do the vast bulk of those basic industries. A lot of them are household names. Just get a bunch of them together into a portfolio, and you pretty much got exposure to every basic industry in every major country in the world, because some of these conglomerates literally are everywhere.
Yeah, is that like would 3M be an example of one of those?
One of them, yes, exactly.
Yeah.
Again, I tried to be careful talking about specific names because, as you say, we're not supposed to give specific financial advice. But
Yeah,
but
just mean as an
but
example
indeed,
of
they have a lot of those, that characteristic for sure.
Yeah. So, but that's the interesting part of it, right? So if you went to if you told somebody this is the environment that we're in, and this is something that you need to be thinking about your portfolio in these terms, and if they're going to say, what? So you're just going to tell me to buy 3M? Is that it? Because it's so dull. It's not exciting. Everything needs to be about changing the world. I think we've lost John there. Probably an internet issue, but we are 15 minutes in. So I think it's probably a good time to have a little look through some of the chat. So Paul, who is long FTSE gold and short US, has pretty much the same view as John this show at the minute. It is a very interesting one with how the FTSE will perform, as it's been such a laggard for so long. And at the same time, Seamus saying, such a nostalgic emotion fest was the latest Top Gun movie. You should have gone long on Kleenex or equivalent. Well, Seamus, I'm actually too young to have appreciated the first Top Gun movie. It's much more of a boomer flick, I found. I only watched the first one in 2020, actually, which probably makes me look quite out of touch. But maybe I should be long on boomer nostalgia, because I think we're going to see a lot more of that in the years to come, as they are such a large part of the population and there's such a large market. Even though inflation is going to be blowing up over the next few years, there'll be plenty of boomers who still have enough money to be able to go to the cinema. So I can imagine being long nostalgia from the boomer generation being quite a winner in the future. Now, Stephen says, a 2-hour film is long enough to brainwash people. Just imagine what you could do with 24/7 propaganda for 2 years to a population. You could even persuade them there is a pandemic. Very good, Stephen. Very good indeed. I'll try my best not to read too much into that. Leslie has something. Leslie has a question on, I believe, miners and when and how. Let's see. What percentage do you estimate miners to stop dropping in the coming 80% market crash, and would that apply to major ones? Should we sell them and buy back? Quite a specific question there, Leslie. I don't think I could help too much on that. And when you're talking about specific percentages as well, that is very, very sensitive indeed. John would probably have a good ballpark range, and I think he may be able to come back and maybe he can give a comment on that. John, you're back. Can you hear me?
My apologies. I have no idea what happened. I honestly have no idea what happened there.
Well, I've done that to you before, John, and I faded out because I had an internet issue. So it's all good. It's all good. We did have a question actually, which is very specific, which you might not be able to answer. But if you're thinking of a coming market crash, how hard do you think major gold miners would fall in such an environment if it's an inflation-led market crash? Very specific.
Well, obviously they will outperform in real terms, or they certainly should outperform in real terms. The idea is, can they escape gravity entirely in real time? Probably not. Is my answer to that? Okay, probably not. Now you might say, okay, well, gee, then should I sit in cash? The problem is that when the inflation rate's running at sort of at the level it is now, sitting in cash is a very, very expensive way to try and time the market, because you're guaranteed to lose money in real purchasing power terms, right? You're guaranteed to lose money, and so coming out of the market entirely becomes a very expensive proposition over time. Now, I think you can time the market if you really think it's going to reprice dramatically, in the coming months. Fine, okay, fine. Sit in cash for a few months, but that's a tough call to make, in my opinion. And it doesn't mean you should look, if you want to try, be my guest. But what the advice I try to give people is much more, if we are in a given type of environment, such as the structural stagflation we've been talking about, is there a way to construct a portfolio that will outperform throughout that environment, whether you time the market or not? And so that really is what I try to do. So, I mean, let me give you a couple numbers here. If we were to reprice this market in its entirety to try to get it back to something approximating fair value, and this would include a relative underperformance by intangible versus tangible industries and sectors, the overall market, when you run the numbers, the overall market to get back to sort of historical averages, if you want to say that. And this is using the U.S. market as a guide. The FTSE is a much different market structurally, because a lot of that intangible value, of course, is on U.S. corporate balance sheets rather than U.K. corporate balance sheets. So taking the U.S. as an example, the overall market would need to fall from anywhere to 50% to 2/3. That gets you back to historical averages. I stress this point. So if you actually wanted to end up with a really cheap U.S. stock market, you're going to have to get down at least 2/3. That's kind of where you begin to look cheap. So can you imagine a situation where the U.S. stock market goes down by 2/3 or more, and gold miners go sideways or higher in real time? That's difficult for me to imagine. I don't think they would be that. I think they would still feel the gravity. Would they recover quickly thereafter if people still thought they were in a structurally stagflationary environment? Yes, I do. But they'd feel gravity in real time.
Yeah, I mean, we were referring to the rise of algorithmic trading and how many market participants are computers. And in the event of this US stock market falling 2/3 in a short space of time, I think there would be very few places that you would be able to hide and get away with it unless you'd predicted the crash itself and were doing something fancy with options. That would be that would be a very grim scenario. I think what edge of the market, John, do you think would actually be having a good day other than some of these long tail volatility funds in such a scenario?
Again, if it happens quickly, then in real time, escaping that sort of gravity is going to be effectively impossible. And I accept that. But again, I don't believe I have the ability to time a short period in which such a large price correction. So the alternative, of course, looking at the other end of the spectrum here, that repricing, that is getting back to something average or perhaps even cheap in a historical comparison, requiring the U.S. market to decline by 2/3 or more, you realize that could happen over a 5-year period or so, as long as inflation remains in the low double digits, which it could. You still get the same repricing in real terms, right?
Yeah.
So the U.S. stock market just sort of goes sideways, but in real terms, it's declining 10 to 12% a year. Let that run for 5 years, and when you look at if you look at that exponentially, the market's going to be down 2/3 to 3/4 at that point. And so there you go, it's done. And so do you really want to be sitting in cash, waiting it out? No,
Not me.
You're guaranteed to lose money the whole time. So better to hide in those industries that will be relative outperformers in that environment, and who won't see their valuations go. They won't see their valuations go down at all necessarily, because their valuation ratios are already so low. And of course, that means that in price terms, they'll at least be able to hold their real purchasing power in price terms.
Yeah.
Right? That is, the price will actually be able to creep higher, and you'll be receiving it and reinvesting those dividends too.
Yeah, because they actually generate cash flow rather than selling people dreams on how they're going to change the world in 10, 20 years.
But they're generating cash flow on real tangible assets, which hold their value in inflationary times.
Yeah, that's the real moneymaker that people seem to. I think people have just been a little seduced by the marketing of some of the more some of the sexier US tech names, or the US growth names, as you would say. We are getting on a little bit of time. So there's one last big question I'd like to ask you, John, which comes from Apple this evening. It says, hello, Boaz and John. Hello, Apple. What if the EU falls apart? What does that mean for the UK on top of all the other problems? Yeah, there are an awful lot of problems, aren't there? It was very interesting to see Croatia is getting the go-ahead to join the euro. There was an article in the FT which was describing Croatia as an Adriatic state rather than a Balkan country, which I found slightly amusing. What is your take on where the EU is going to go in this kind of environment? Because cost of living squeeze puts a huge amount of strain on this multilateral and yet not quite total union that we have in the Eurozone.
Well, I think the EU is in serious trouble. I mean, obviously, the war in Ukraine is a problem for them, especially on their eastern flank. They have demographic issues. I mentioned those earlier. Yes, that's true in the UK also, arguably even greater throughout much of the EU. You have the construction of the euro, which is still a very fragile thing when you think of, and the North-South divide, and the target 2 imbalances that have built up within the euro area, and the need for Germany to carry all of that on its back indefinitely in what is now a highly inflationary environment going against their political culture. I mean, these are all huge challenges. Now, I'm not predicting the EU is going to blow up, but I would say this. I don't think the EU will survive the decade in its current form. I think there's going to need to be some sort of fundamental reform of some kind. And we don't have enough time here to go into what that might be. But I don't think it's simply going to go on as is. I don't think it will work out that way. And yes, that may also imply that the euro currently works, has to be restructured in some way. And so the briefest answer to this question regarding how it affects the UK is, well, when the Titanic sunk, you really wanted to be in a lifeboat.
I think that's you didn't want to be on a deck chair, that's for sure.
And Brexit is kind of a lifeboat. Does it mean that getting into a lifeboat isn't disruptive and frightening? It's very disruptive and frightening. It's uncomfortable. It's scary. But the alternative, do you really want to go down with the ship? Sometimes I feel that that's the simplest way to explain why Brexit might actually have been a good idea, notwithstanding the disruptions that might still occur, notwithstanding the challenges, notwithstanding everything. Just getting out of the EU might have been a really sensible move given these challenges the EU faces.
Yeah, we were going to have a big discussion this evening on US-UK economic cooperation, what with Palantir now bidding for a big NHS contract. But sadly, we are at the end of the line for the show. So maybe that can be the main theme of next week's show.
Next time,
indeed. There is plenty to discuss with my plans for East Hawaii, as I'm calling it. But that can wait for the next episode. Cheryl, one last comment. Cheryl says, I just thought of a solution to the war. Trump can buy Ukraine. Well, Cheryl, I'm still waiting on Trump to buy Greenland. But once he's done that, we can talk about Ukraine. Big thank you to everybody who has tuned in for this week's show. It has been a great one as ever. Loads of commentary in the chat, which is always great to see. Apologies if we didn't answer your question or refer to your comment during the show, but we shall do our best to address more of some of these themes in next week's. But John, great show as ever. Thanks for coming on.
My pleasure, Boaz. Next time.
All right, folks, that's all for now. Thanks again for tuning in, and we'll see you in the next one. Bye-bye.